Mr. Bordoff, let me ask you a question, because you've been before this committee when we had a hearing on our Strategic Petroleum Reserve, and there's been a little bit of discussion here about cushion and just some availability of supply that allows us to have some degree of control here. We haven't really talked about the Strategic Petroleum Reserve. As you know, I've been long one of those proponents that says, look, this is a reserve, and it's important that we preserve this reserve. So if we were to see any kind of a prolonged disruption, how important is it that we continue a decent level of domestic oil production, just from a national security perspective and energy perspective? And as you know, we have moved forward with some sale from the SPR, some drawdowns, and unfortunately, I think we have people that have looked at the Strategic Petroleum Reserve as an avenue or an opportunity for access to cash. I call it a cash machine, which is not what it was intended to be. Can you just speak a little bit to the significance of the Strategic Petroleum Reserve and why it's important that we keep up a level of domestic production?
Yeah, thank you for the question, Chairman Murkowski. So I think at the time I had talked about the ways in which the global oil markets changed over the last 40 years and the extent to which long-term contracts and supply on particular destinations had given way to a very liquid, very fungible global market, potentially creating new risks. So whether we're a large producer or not, whether we're a large importer or not, if there's a supply outage somewhere in the world, if something were to happen in the Strait of Hormuz or somewhere else, prices would go up globally for everyone. The Strategic Petroleum Reserve can play an important role in mitigating that, but it is a global market, so we need to sort of think about the limitations of any stockpile that we would have. But I think the SPR has been a really important national security resource for 40 years. I think it is appropriate, and I think the Department of Energy is doing this, sort of taking a careful look at how the market has changed, and should we, as a result of that, think about changing SPR policy, whether it's the mix of crude versus refined products, whether we should be using it more often or less often, whether we should be increasing or decreasing the size. I wouldn't do that just to raise revenue. In terms of increasing domestic supply, the impact of that in the global, more supply in the global market on the margin helps with supply security, helps lower price. A U.S. shale boom of almost 5 million barrels a day of supply over the last 6 years or so, I think, has been the primary driver of the oil price decline that we're seeing now. And as I talked about earlier, I think the macroeconomic vulnerability we have to price shocks is lower when we're less of a net importer. So there are benefits, both economic and geopolitical, to increasing domestic supply.
My last question is going to be hopefully a little bit of a lightning round here. What I have heard from each of you is that, look, oil prices go up, they go down. I haven't heard any one of you suggest that oil prices are not going to rise at some point in time. It's just a question of when and how much. So the question to you is, so how do we prepare for that next increase, and do we start preparing now? I mean, give me a couple steps as to what we do to prepare for higher oil prices. And if I have misread your comments and you don't think that we're going to see higher oil prices, you can tell me that too. But recognizing that it's more likely than not that it will come, how do we best prepare for that? And we'll just start with you, Mr. Bordoff, and go straight down the line. And I don't want a long answer. Maybe there are no short answers, but yes, you can answer too. You're after Mr. Ratner.
I think it is true we're going to see boom and bust cycles. We've seen them before. And I think after Edwin Drake discovered oil in 1859, the price went from $16 to 50 cents, back to $8 during the Civil War. So prices move around a lot, and they're going to again. And that's why I think we need to make sure we have really good policies in place, good environmental protections, all the rest, to make sure we have strong domestic supply. But also, as I said before, reducing the oil intensity of our economy reduces our vulnerability to those sharp swings in price. So things we can do that have economic, national security, and environmental benefits that over time reduce how dependent our economy is on oil, I think that is what will make us more energy secure.
Okay, so good policies and reduce our reliance. Mr. Cass?
Well, I should say I have no idea whether oil prices will ever go up significantly again or not. Seems like they might. $40 might be the highest they ever go. I think the important thing is that the government play the role of maintaining a market and let private investors place their bets where they will. And so I think maintaining a good market for future investment means asking the question, what kind of production do we want to be capable of in 2025 or 2030? And what we've learned from the shale boom is essentially the more the better, that to the extent that private companies would like to invest in developing additional resources, the better off America will be. And so that means creating as much certainty as possible in the market to encourage the investment, and then providing access to the resources with all of the regulatory controls that Mr. Bordoff described, but providing access and providing certainty that if people want to make the investments, they can pursue the production.
So the certainty there. Interesting suggestion, though, that we need to determine what level of production we actually want a decade or so from now. Of course, we don't know where our technologies will take us, but okay, appreciate that. Ms. Minter.
Thank you. This will sort of feed off of Mr. Cass's comments. Really, what's wrong with the pricing scenario right now is we clearly just have too much energy, right? Supply and demand and infrastructure all need to align themselves in order for the market to work. And when we're oversupplied on one end of the equation without adequate demand, prices respond. I do agree with you that prices come up over time, and that will be a result of the fact that demand growth has demand growth has kicked in. So allowing for supply and demand to drive the market, and also allowing for policy to continue, that we continue to build out adequate infrastructure to allow these two pieces to meet when they occur, will allow for less volatility in the price markets going forward. They will be higher, but they will probably become less volatile when you can get your product to your market and you have a market to get it to.
Mm-hmm. And perhaps even accepting a little bit higher price with less volatility is not a bad thing for your economy.
I would.
Ms. Palti-Guzman, would you agree?
Yes, ma'am.
Yeah.
So next, when we see the next increase in oil prices, potentially beyond 2017, but sub $100 anyway, I think, there will be a direct impact on the call for US LNG, as the oil index suppliers to Asia, for instance, will lose competitiveness again. But I wouldn't take this for granted, and the US needs to remain a reliable and stable supplier. And for this, maybe alleviate some anxiety from buyers that one day some export license could be revoked, or there would be a policy change. So for that, I think that all the trade partnerships that are being discussed now are definitely encouraging more buyers to look into US LNG, and even more in the future. And I think there is also an institutional role from governments in the US and all around the world to push for more liquidity and transparency in the global LNG market.
Very good, thank you. Mr. Ratner.
Sure. Well, as I said in my opening statement, CRS doesn't recommend policy, but I will comment on a couple of observations that I've seen in my career. And I think shale gas and tight oil offer a good example of things that came up when nobody else was looking at those. If you think back to the mid-2000s and early 2000s when we were building the LNG import terminals, there was, I've looked back, there are no articles about shale gas and what it could mean. And then all of a sudden it showed up on the scene and changed the way that we do business. So I think things that encourage market efficiency, both on the supply and the demand side, are the most important things.